Would you take a mortgage that costs way more in the long run, but gives you a lower monthly payment today? Because right now, the federal government is talking about 50-year mortgages. Yes, 50 years. And it could change how people here in Irvine and Tustin buy, sell, and invest. Some say it's a smart move. Others says it's a financial trap. So today, I am breaking down exactly what this means in super simple terms, using real number, real example, and what it means for families right here in Orange County. I'm Regina Chen, your Irvine and Tustin legacy realtor. And if you want clear, no-nonsense advice instead of confusing headline or hype, you're in the right place. Tell me in the comment, would you consider a 50-year mortgage if it got you into the home you wanted? Yes or no? There's no wrong answer. I'm just curious where you stand. So far, what's been discussed? Here is the deal. Federal housing leaders are exploring a 50-year fixed mortgage as a way to lower monthly payments and help buyers who feel priced out. Please remember, number one, this is not final. Number two, it's a proposal. Number three, we don't know exactly when or even if it will roll out. But it's been talked about seriously enough that buyers and sellers are asking me about it. So let's break it down. Let's look at the simple payment method. If you borrow $1 million, here is what your monthly principal and interest payment roughly looks like today. For 30 years mortgage at around 6.2%, we're looking at $6,138. If it's 50 years, the interest rate will be slightly higher at 6.6. So that's $5,742. So 50 years loan saves you about $396 a month. Not life-changing. But for some people, that makes a difference. For example, it could mean the difference between qualifying or not qualifying based on the debt to income ratio. Or number two, the difference will be like buying the home you want and love versus the one you have to settle for. Number three, it gives some breathing room in the budget for kids' activity, travel, or family saving or investment. And if inflation continues, which many economists believe, a fixed payment locked in for 50 years means you have kept one of the biggest living expenses while everything else becomes more expensive over time. Now, here's where it flips. Because you are paying it off over a much longer time horizon at a slightly higher rate, you pay hundreds of thousands more in interest long term. Quick pause. If you find this helpful so far, hit the like button because it tells you too this is valuable and help more local families see it. All right, back to the video. Next, let's talk about a benefit most people forget. There is a real upside to a 50-year loan that's worth acknowledging. It's fixed for 50 years, meaning, number one, your mortgage payment won't change. Number two, even if inflation keeps rising, which many economists believe, your housing costs stay steady. Number three, you are locked in your biggest expense. For families who plan long-term and want stability, that predictability can feel like security. Let's talk about the equity problem. Here is a downside. You build equity much slower with a 50-year loan. Most of your payment goes to interest, not principal, for many, many years. Let's see, after 10 years of the loan, with a 30-year loan, you have paid off around 20% of your balance. With a 50-year loan, you have paid off around 9%. So if you're planning to, number one, move again in 5 to 7 years, or number two, trade up, number three, sell to take equity into your next home, number four, refinance soon, then a 50-year loan might actually hold you back. But most people don't keep their loan that long. Now, here's the good news. Most Americans don't keep a mortgage for 30 years, let alone 50. The average homeowner stays in the house about 12 years. So yes, a 50-year loan sounds scary, but most people will refinance or move long before that final payment. But still, slow equity matters, especially in a high-cost market like Irvine. All right, so what that means for Irvine and Tustin? Well, let's bring this home to our local market. For Irvine buyers, a 50-year mortgage can help if, number one, you have a strong and stable income. Number two, the 30-year payment is just out of reach for you. Number three, you'd rather buy now than keep renting. Number four, you're disciplined enough to invest those monthly savings into something else. Number five, you plan to stay put for a while. But a 50-year is not ideal if, number one, your main goal is building equity. Number two, if you want to move again within 5 to 7 years. Number three, you are close to retirement year. Number four, you're on a tight budget and can handle higher lifetime interest. For investor, if you care about cash flow, a slightly lower payment can make the math work better. Just know the interest bill will be higher. For Irvine and Tustin sellers, if a 50-year mortgage ever rolls out widely, it may, number one, slightly expand the buyer pool. Number two, help borderline buyers qualify. Number three, support demands in certain price bracket, price band. But it won't cause a massive buying wave. It's more like a gentle nudge, not like a tidal wave. And here comes the biggest misunderstanding. Some people think a 50-year mortgage will suddenly make housing affordable. Well, unfortunately, it won't. Why? Because the real issue is lack of supply. We can use more supply. We simply don't build enough homes here. A longer mortgage doesn't create more homes. It just kind of moves the pieces around a little bit. So think of the 50-year mortgage as the tool, not a magic solution. So let's talk about it. Should you consider it? Well, here is my honest take. A 50-year mortgage can be helpful for certain buyers with steady income who need a lower monthly payment and believe in investing the difference. But it is not the best choice for everyone. If you want to know whether this fits your situation, let's chat, and you and I will run through your numbers side by side. We're looking at the 30 years versus 50 years. We're going to look at the payment schedule. We will also look into the equity after 5 years. We will also explore, entertain the rates buy down opportunities. And don't forget the local Irvine tax and HOA considerations. If you find this helpful, please like this video, subscribe, and share it with anyone who's trying to make sense of this market. I'm Regina Chen, your Irvine and Tustin Legacy Realtor, and I'm here to help you make smart real estate decisions. Not just today, but for your family's future. I'll see you in the next video.